Right, we're going to get a more in-depth view of exactly how the market is trading today, and Kyle Burgess, who's a portfolio manager at Nedbank Private Wealth, joins us in studio for more. Kyle, happy spring day.
Thanks, and same to you. Good to see you.
Thank you so much. It's been a long time. Can we first begin with what is happening in Kenya? So that decision to nullify the elections. Of course, a number of South African companies have got operations there. How should we be assessing this situation and these companies in our portfolio?
So I think there's a couple of different ways that you can have a look at it, and sort of much like South Africa, this kind of decision really just shows you the strength of the court system in Kenya, which is fantastic. But on the other hand, it makes you very cognizant of the sort of risks that are sort of prevalent in investing in these sort of markets where there is political uncertainty. But I think if you have a look at it over the last sort of 5-6 years, I think the attitude towards Africa and investing in Africa has changed somewhat. I think if you 5-6 years ago, that everyone wanted exposure to Africa and kind of went in, as soon as they could get in at any sort of opportunity at any cost. And I think, without really looking at the risks involved in it, I think a lot of companies have, lost a lot of money in Africa. I think Shoprite have done a particularly good job. They've probably been there the longest, sort of 11-12 years, and they've done really well. But it really just brings to light the risks of investing in Africa, and I think this is, I think on a net basis, I think it's a positive outcome.
I suppose the positive or the right thing to do right now would be not to read too much into the situation. Wait for the next 60 days until we have a fresh election outcome.
Yeah, absolutely. So I think Kenyatta has always been probably a known sort of a quantity. So investors, I think, will be watching this quite closely. As you said, the next 60 days are very important.
All right, another stock that you guys are watching quite closely today, Mr. Price. That share price up almost 5% today. They did release a trading update. Judging by the reaction of the market, you guys are pretty happy with Mr. Price's performance.
Yeah, so it's great. I think up 4.5% to share price, and it really just speaks to the performance of that trading statement. And if you'll remember, just probably about 12 months ago, around the same time they released a trading statement results. I can't quite remember, but they were fairly disappointing, and I mean it had really a lot to do with poor fashion decisions in their apparel and miladies sections of the business. So the stock was really punished. It dropped, I think, between 10 and 14% on the day, if I'm not mistaken. So this year it's really had a strong performance. It's come back, not quite to those 200 Rand levels, but we see it back sort of closer to 180. So just in that trading statement, their miladies and their apparel section, which really make up, I think it's between 60 and 65% of group revenue, pushing sales by between sort of up 10%, as you mentioned earlier in your intro. So that's a great result for them, and it just speaks to the quality of management, and I think it's what the market has been watching over the last 12 months, really. So good to see that. And
they're talking about clawing back market share. Question is, from who? I mean, they did flag in previous statements that they had lost it to international retailers. So would it be a correct to guess that that's where they're getting it from?
Yeah, certainly. So your Cotton On, Zara, H&M, I think they have been a thorn in the side of SA retailers. They're coming in with, pretty good quality offerings at really attractive price points. So yeah, I think this result is really, well, trading statement is is really a solid reflection on their 12 months. So really looking forward to seeing the results that they put out.
And perhaps Miladies is even benefiting from the closure of Stutterfords. But onto Stutterfords, let's talk about Hyprop. They also came up with results. Of course, Stutterfords used to be in some of their malls, but now that's gone. But they did declare a 12% distribution. What did you make of Hyprop's numbers?
So I think management have targeted a 12% distribution as where they'd like to be, and today they released, I think it was 12.1%, so just kind of north of that, which is great. How sort of sustainable that is, I mean, if you have a look at the SA market, I think you're looking at between sort of 6 and 7% escalation growth, which is quite far away from that 12%. So it really puts a lot of pressure on their Central Eastern European businesses to really enhance that distribution growth, as well as their operations in Nigeria and Ghana. So a pretty decent set of results. They highlighted some weakness that they saw in their office segment, but that's got a lot to do with Sasol moving sort of premises and a lot of space that they left open there. So I think just from a top line perspective, it looked pretty good. I think there's still some concern around the Mall of Sofia that they've just it's a 60% stake that they've taken in I think it's Bulgaria, and that 60% stake is through their JV that's based in the UK. So it's a very attractive region, but just around that transaction, they didn't really release any information in terms of the yield that they acquired it at. So I think it was around 175 million euros, but not much other information was released through that. So not fantastic sort of from an investor perspective, because you don't really know what you're dealing with. But you know, if you have a look at you know, Hyprop in the past, it's really been a solid performer. You know, they've got a really high quality portfolio of assets in terms of trading densities. Excuse me. This last result showed you know, a bit of a pullback in terms of that. But if you look at it over the last 5 years, they've constantly increased those trading densities and you know, maintained that distribution, which is great. So it's, you know, it's a stock that we like. Would we be buying it at these levels? I'm not too sure. You know, there's a lot going on in the property space at the moment. So yeah.
And would you be buying a Brait? Because a lot of people are selling a Brait here today. We've got media reports out that the CEO of the UK operations, New Look, has stepped down. Not a lot of information out of that, but can we pin the fall in the share price here today on that announcement?
I think it probably had more to do, I think that might have something to do with it, but I think it probably has more to do with the fact that Moody's downgraded their debt from B- to triple C. So I think that came out last night, and that was just on the back of poorer performances you know, in the last 12 months, and again on the fact that you know, they probably don't see much improvement you know, in going forward for the next 12 months. So Danny Brazerio, who's the MD of New Look in Ireland, is effectively the sort of stand-in CEO while they find a replacement. So whether he'll take that forward, I'm not really sure. I haven't had you know, and I don't know enough about the current CEO or the sort of interim CEO, you know, really to make a kind of thorough assessment on that. But certainly that probably had, you know, in part to do with the you know, the share price weakness that we've seen throughout the week. You know, that stock trading at around 56 Rand, which is unprecedented, really.
Well, we finish off with the U.S. jobs numbers. Obviously, that's what everybody's looking out for today. I mean, earlier this week, we had U.S. GDP figures that were stronger than expected. So should we be taking our cue that jobs will likely also beat?
I don't know. We've seen a trend. I think the last 6 jobs numbers that have come out have failed to beat expectations, and this is really one area that you know, we have seen some poor data out of the U.S. And you know, I say that the rest of the data that we've seen has been fairly strong, especially this week, as you mentioned. So I think a lot of guys, you know, taking their cue, will take their cue from that. And of course, there's that coming out around 3 o'clock. So just before Wall Street opens, they'll release those non-farm payrolls. I think the expectation is around 178, if I'm not mistaken. And of course, you know, the importance, you know, around this is the fact that if it is a strong beat, you know, the Fed will more than likely increase interest rates, you know, sooner than expected. And of course, you know, the dollar might react, well, not might, it probably will react on the back of that. So certainly a lot of investors keeping their eye very closely on that.
Which means the Rand could also potentially give back some of its gains. But Kyle, we're going to have to leave it there. Thanks so much for your time. That was Kyle Burgess, a portfolio manager at Nedbank Private Wealth. Now,